Hey, Dan Passarelli here. Well, today is what you might call a topsy-turvy sort of market today, a mixed market in sectors and individual stocks alike. And kind of weird, but if you were watching some of the videos that I put out in the last week or so of 2022, I think you might not be all that surprised by what happened today and what we're going to talk about here. So if you look at the S&P 500, it opened a gap higher above its 50-day moving average, and then was up about $5, as you can see here in this chart on this candle right here, but then ended up pulling back and ended up down slightly on the day with the red candle and closing, importantly, below its 50-day moving average. Now, what's a little interesting there is some of the sectors here, like you see XLV, and let's pull that up here. XLV, that stock was down pretty good today, and that's the healthcare ETF, and that's had a really good run for the past 3 months or so. And so it's a little bit of a reversal of fortunes on that one. Now, another sector here, if we look at the XLP, that is, whoops, sorry, wrong symbol there. Oops. XLP, that's the consumer staples. Now, that's another one that had a pretty good run for the past 3 months and had a bit of a reversal of fortunes. And then let's look at one more here, XLK, which, of course, is the technology ETF. That one's been pretty battered down. I mean, the last couple of months, it was up, but that's following a real massive decline. That one ended up having a pretty good day today. So what do I make of this? Again, if you watch some of my videos in the last week or so of last year, you heard me say that a lot of folks in the last week, especially the last couple of days of the year before the calendar year ends, they sell some of the stocks that and sector ETFs and stocks within those ETFs that they like, but they want to take maybe a tax loss on, right? Or some that they like and they want to hold, but it might not fit their charter, and they want to do some window dressing and show that they didn't own those stocks because they were down on the year, even though they really like them. And so maybe some of those technology stocks they're buying back. And then the opposite logic applies, to the healthcare sector and consumer staples. And an individual name here is TSLA, which we all know and love. That's Tesla, right? So that one has just been getting annihilated over the past, since September, losing over half of its value. And that's one where right here around the end of the year, the last 2 weeks of the year, it really got pummeled. And I think that is a lot of the people who like the stock but were taking some tax losses and then decided to, maybe buy it back yesterday and today, forcing it back higher. So moral of the story is, where does this lead us? We might be able to see a little bit of at least a short-term run in Tesla, and if those folks are right, maybe even a longer-term run. And if we keep an eye on the sectors that reverse some fortunes from the last week or two of the year, we might keep an eye on those too to get a little bit of follow-through in their direction as well. This is Dan Passarelli. I hope that helps. Trade smart.